Well, Bitcoin so far has broken last week's high, and we're currently sitting around the $71,000 region. In this video, I'm going to discuss with you the possibility of a $74,000 to $76,000 Bitcoin. We're going to go through where we are currently in the model that we trade on this channel. And I also actually want to spend a little bit more time on Ethereum in this video because I want to go and have a look at the ETH BTC pair. We know for quite some time that ETH has really been lagging. So I want to investigate with you whether or not there is a bigger opportunity coming potentially for Ethereum. So if you are new here, welcome. If you're returning, welcome back. Be sure to smash that like button nice and early and hit subscribe if you're not already subscribed. And we're going to get into the video. So let's have a look at some charts. Okay, so first of all, I want to go through with you what Bitcoin has been doing so far this week and where we are at in the current model, following on from my last video. So in the last video from last week, we talked about the FOMC and looking for a W formation around that. We did get that. FOMC was Wednesday last week, and this is where we ended up seeing the trend reversal. One unexpected thing did happen, and that was this really deep retracement. So normally after a W formation, we would expect either sideways consolidation or a retracement. And we got that around here, but then Friday happened, and Friday as part of the model is where the trap is set for the weekend. And that's usually set in UK. And we can see here that because our retracement took too long it took the whole of Thursday. When it got to Friday, it was time for the trap instead. So the trap gave us actually quite a deep retracement. But you can see here what I've written is it did not invalidate the W. So when something unexpected happens, as long as it doesn't invalidate where you are in the cycle, the counts still count. So after a W formation, we expect a level 1 rise, then either a consolidation or a retracement. Because this area right here where that retracement bottomed out was still a higher low in comparison to the low of the W, then that would mean that this is still a valid formation, just with an extra unexpected deep retracement. So the W, rise 1, retracement, we would expect a rise 2 to follow. So moving on from that, this is the rise 2 that happened over the weekend. And this is where we are currently. That rise has broken the high of last week at $69,050. And we are now setting a new initial high of the day currently. Or we have set it, and we're now in the UK session seeing if we're going to hold that or not. So according to this, we should have another level to go because we look for 3 level rises, and we can clearly see 2, and I'm on the 1 hour time frame. I find that the 1 hour time frame just seems to be working a lot better lately for this method. And the 1 hour time frame really is what you should be paying attention to anyway if you're looking for the 3-day swings. Jumping down to lower time frames, the 15-minute, for example, you would only do that to get your entry so that you can get a really small stop loss, or because you're day trading. So you would be entering and closing your trades, within a 24-hour period. With this model, your trades would be 3 to 5 days. That's how long you'd be expecting to hold on to them. So now that we know where we are, what we want to look at is there still liquidity above price that would help us to validate that we're going to get a higher price, we're going to get a level 3 rise. We want to have a look at that. We want to have a look at Heatmap orders to see, is anyone interested in shorting this that might change the trend? And we also want to have a look at some news events. So let's go through all of that one by one. So first up, these are the news events that we've got going on this week. We've got consumer confidence today, and then most of the news events are on Thursday of this week. And we've also got Powell speaking on Friday, as well as core PCE. So it could be that towards the end of the week might give us that midweek reversal, which means with today being Tuesday and most of the news events being Thursday, Friday, there is room for that level 3 rise between now and Thursday, Friday. So that ticks the box on a potential continuation to the upside. Now, when it comes to Heatmap limit orders, unfortunately, Trading Light is having a glitch right now, so we can't go through that, but I really don't 100% feel like we need it at this point in time. What I want to look at instead is the liquidity that is currently available. So I'm going to have a look at the liquidation heat map. So in order for me to choose the look back period of time, what I actually want to do is go back to see when the last significant dip was, because that's where people would be taking long positions. And in this case, it was kind of quite recent. So this breakdown here was 17%. So I pretty much need from around the 14th of March, which is about 12 days. So if I'm going to look at the heat map, then I need anything bigger than 12 days. So I'm going to go to 1 month for this. Now, a lot of people have been asking me about this. You're going to see in a moment that it will bring up the liquidity directly on my chart. This is a new tool that we've developed at TTC, and it's really super amazing. If you've been watching my channel for a while, you will know that usually I use a separate software to show you this information. And that software comes from this website, which is Highblock Capital. And it's a separate subscription and, it can be fairly pricey. So what we've actually done is worked with Highblock to develop our own tool to have it overlay directly onto the charts of our community members. So if you're in TTC and you haven't noticed that we've just done this feature, be sure to jump in the Discord and get access to it. And if you're not, then this is just another reason to join TTC, because you get access to all tools like this for as long as you're an active member. And it means you save on a subscription on another piece of software. So we can see here that using this, we've got around the 74K region is a high level of liquidity. And if I go back to my chart, you can see that that liquidity is right here at around 74,000 as well. So it's literally the same data. The advantage is that it's directly on your chart. You don't need to go here, look at the level, come back to your chart, mark it out. That's how we used to do it. That was the old process. Now it's all there for us. So when we look at this, we can see that this 1 month liquidity is still a pretty high area above price. And that is sitting, like I said, between about 74 to about 75.5K. So that would mean if we do think we're going to get a level 3 rise, that would be our initial target that might take us up into this zone. Now, does that mean that that's the end of it? Does that mean that this 17% pullback here was the biggest pullback we're going to get before the halving? Hard to say. I pay attention to astrology a lot when I'm looking for bigger macro moves, and the March 25th kind of date was one to be very cautious of. Ended up coming in a little bit earlier, but that's how astrology works. It can be a few days either side of, whatever is happening in the planetary alignments. However, there is another eclipse around 10th of April, I believe, that is another cautionary period. So, it's possible that there is another dip before the halving. And I would just say any dips from here on in, they're just buy opportunities for things that you wanted that you don't have. I say this on the channel all the time. I would not be afraid of dips. At this point in time, any dips that we've had leading up to the halving haven't been more than 20%. I think everybody's waiting for the 30-40% pullback to get super, super cheap things. But if it's not happening, it's not happening. And sometimes you just have to deploy some capital and get in on the things you want, because waiting for extra super low prices, well, people who are waiting for 12K Bitcoin seriously regretting it right now, right? So you don't want to be that person. Don't get married to prices or percentage dips or things like that and convince yourself that something must happen. Just trade what you see, and if you see a reversal pattern, it's time to execute. So at this point in time, I'm pretty happy with the idea that Bitcoin should at some point in this week see further upside. The test is going to be the how. So that's the high of the week here at 69,000. If Bitcoin breaks below that, that's going to be a problem. However, if it just comes back, consolidates a bit and retests it and holds it, that would be a really great area before we head up to create the level 3 rise. And the reason why I say that's a great area, number one, how retests are amazing. It's a break of a previous high, a retest of a previous high. That is a pretty bullish signal. In addition to that, it will be somewhere around the 50 EMA as well. So yeah, I wouldn't mind something like that as a retest. I'm already long, so I'm not looking for new positions myself. But if I was, that's what I would be looking out for. Anything between 50% Asia, which is currently sitting at about 70,240, to the high of the week at about 69K. Anywhere between there, if you happen to get a reversal signal at a session changeover, that would be good in my opinion. However, as I said before, if we start to break below the how, I would have to reassess. I still wouldn't necessarily be worried because we have this here. We have an unrecovered fast moving vector here, and then we have another one down here. So it could end up being a 200 EMA retest, but I wouldn't want to make a judgment on that until I could see how fast price was moving. So right now, what I've got my eye on for potential continuation is the high of the week or 50 EMA retest on the 1 hour time frame for Bitcoin. Now, let's move on to Ethereum. So I'm looking at ETH USD first, USDT. And what I can immediately identify is the M formation that caused the last peak formation high. We came down from there. Our percentage drop was really quite a good one, actually. It was 25%, great for altcoins. And then we had this here, which we would classify as a V-bottom reversal, but on a smaller time frame, it's probably actually a W formation. It's pretty weak though, because this then didn't break the 50 EMA with a vector on the 1 hour time frame. Probably did on the 15 minute. Let's have a look. No, see, it didn't even on the 15 minute. So it's a pretty weak bounce in all honesty, and probably was really only helped by Bitcoin. But since then we had the retracement and we're now also in the next rise from here as well. Now, ETH has not broken its high of the week yet. So that's one thing to pay attention to. However, as long as it's creating higher lows, you would expect that it's just building up the momentum to break it next. So keep an eye, because a rejection of the high of the week is also a very, very good reversal signal where it may change trend soon. So you would be looking now for, if you were to believe that it's going to break down, you'd be looking for a change in structure under the high of the week, and that would be a lower high. And that's what you'd be looking for before you shorted anything. But for as long as it's creating higher highs and higher lows, it's in a trend to the upside, and you would be looking for the next higher low. If you needed a new position and you wanted to go long on this, you'd be looking for the next higher low on the assumption that the next attempt will break the how. So let's have a look at the liquidity on this one. I'm going to use a different tool here. So I'm going to use the liquidation levels for Ethereum. I'm going to include all the leverage, both longs and shorts, and I want to choose the Binance exchange. So when we have a look at the liquidity, it might be a little bit difficult to see on the screen, but there are blue areas up here that take us up to about 37.81, and there's a lot of liquidity below. So look, even if ETH came back to test the 50 EMA, that again would still be a higher low. Even the 200 would still be a higher low. And then that could be what it needs to build the momentum to then break through to the upside. And we can see that there is some liquidity there for it to take. So if it was going to do the 200 to the 50 EMA, we're looking at around a 34.92 to about 35.50, let's say, that kind of area for a retest for ETH. Now I want to look at the higher time frame liquidity for this as well. So I'm just going to layer on top of it the heat map for also the last month. And yeah, now this is a little bit more interesting because this here is at about 4,100, and that is an area that is just below a previous unrecovered vector that I have marked previously. So yeah, if we can break that how, look, for me, the more it retraces but maintains structure, meaning it can retrace back to the levels that I said, the 50 and the 200, the more it does that before it breaks the how but maintains a higher low, the more I'm going to think that it's just building up momentum to be able to do a big move to the upside to come and take out this liquidity. So that's what I would be watching for in price action on ETH, on the ETH USDT pair right now. Is it actually going to just slowly build momentum here, just a little bit under the how? Because I don't have a strong rejection of the how yet. So I don't really have a reason to think it's going to reverse from here. And also if I'm following the model, I have a level 1 rise, retracement level 2. So I should be believing that a level 3 rise is coming. And my focus should be on where am I going to get the best price to get an entry. So, and I set my conditions based on that. So my condition for ETH would be to see what happens around the 50 and the 200 EMA if we pull back that far. I will also have to keep an eye on the initial low of the day for this one. and that sits at around 35.70. So yeah, make that your whole region to look for a retest. If it is super, super bullish, it will hold 50% Asia. Now, that you have to think about your risk to reward, because, you know, like, let me draw that out to show exactly what I mean. If we got a bounce off 50% Asia, which is at about 36.20, then my stop loss has to go below the initial low of the day, right? Because that's the lowest point that we spiked into so far today. And really, my target should be the high of the week. So that's a 1.1 risk to reward. That's not a good trade. You would only enter something like that if you were assuming it's going to break the how next and you felt super, super confident about it. I mean, look, it may work out that way and it may go in your favor. And I'm not saying don't do it, but if you were only to take this trade to the high of the week, it just wouldn't be a trade worth taking. Where I would do it instead, if I was going to enter off a 50% Asia retest, I would first want to take out the blue liquidity. So that would be my initial target. That makes it now a 3-to-1 trade, which is a little bit better. Then I would reassess this position to see if it's worth staying in. And if it was, you know, still holding the EMAs and it was still trending and, you know, there was no stop hunts and big kind of sharp volatile moves, then I would hold on to it a bit longer to come for this liquidity, which would then give me almost a 9-to-1 risk to reward. That's how I would play that on ETH. But before I do any of that, I'm going to clear this because I want to have a look now at ETH BTC, which is probably going to tell me, why are you even bothering trading this thing? Like, if it's bearish, it's not going to be fun. But I'm going to look at it on a high time frame. So let me start on the monthly. And I'm only doing that because I really have not looked at ETH BTC in a really long time, because I've kind of just assumed what's been going on there. And so when you look at it on the monthly, like, you know, it really hasn't changed much in an extreme amount of time. It's been in a triangle since the day Jesus was born. You know what I mean? Like, so yeah, but if it breaks too much lower than where it is now, we don't really have any monthly unrecovered vectors for it to recover. So that's a problem. You know, it's rejected the 50 EMA a number of times. Is it making its way back down to the trend line? Quite possibly. So that's something to keep in mind. Let's have a look at the weekly. Now on the weekly, we do have a vector candle to be aware of, which is this one right here. And we spiked into it pretty much twice so far. So yeah, we would be paying attention to this one to see if it holds. And it could be that it's just consolidating. It's going to hold it on the third attempt, and then eventually we'll get that big breakout to the upside. But this is the weekly time frame, and we were looking on the USDT pair, we were looking for retests for, you know, pretty much to happen in the next couple of days. So the weekly time frame is way too high. We just want to know what is going on macro wise. So let's go down to something that's a little bit more relevant. And so now I can see here that the last bottom out for the 4-hour time frame was this candle right here. We've come back in to retest it once, twice, and we're in it right now. So we would need the structure to change on this very, very soon. It's not looking great, I'm going to be honest with you. What it means is that if you still are insistent on trading ETH USDT, the moves to the upside just aren't going to be that explosive that takes us to the 4100. Like, in order for us to get that explosive Ethereum move, we want the BTC pair to be bullish as well. And that goes for any altcoin that you want to trade. So if you think that it's random, that sometimes coins just have massive percentages and other times they break out and do not much, it's not random. It's you'll find that the big percentage moves come because the Bitcoin pairing of that altcoin happened to be bullish at the same time as well. So that's really what we want. You know, some people say it's not worth trading ETH against USD if ETH BTC is bearish. I understand the point of that, and I do generally I agree. However, it's only relevant if your entire trading account is sitting in Bitcoin, because it means that you are getting a greater return from your Bitcoin than trying to have some of that money in Ethereum when Ethereum is bearish against Bitcoin. That's when it makes total sense. However, if you separate your trading portfolios and you're like, this much is allocated to Bitcoin and that's it, I'm never going to buy more Bitcoin than this, this is my Bitcoin and this portfolio is USDT and the goal is to accumulate USDT, then you weren't going to spend that USDT on Bitcoin anyway. So it's kind of then okay to like leverage trade USDT pairs. But the big disclaimer about that is that you aren't going to make as big percentage gains if you're not paying attention to the Bitcoin pairing of that chart, even though you're trading USDT. Hopefully that makes sense. So I never would swap my Bitcoin for Ethereum. I would never swap my Bitcoin for another altcoin because my Bitcoin is my Bitcoin and I have an allocation for that and that's it. I have separate funds to buy altcoins, to leverage trade and all that sort of stuff. And I don't swap them between each other. They are an allocation on their own. But what I'm trying to do is maximize the gains that I can make from those as much as possible. And the way that I maximize it is by paying attention to the Bitcoin pairing of that coin. When I can see that turn around, then I want to make sure I get my entry on my trade, because I know that a Bitcoin pairing being bullish at the same time as the USDT pairing being bullish is going to give me a greater percentage return. So hopefully that helps you to understand the whole Bitcoin versus USDT pairing debate. That's how I personally use it. So I'm not really like in agreement or disagreement with anyone. I'm just like, well, if I'm only trying to accumulate USDT, then I'm just trying to look at how I'm going to get the most USDT possible. And the reason that I short-term trade is not because I want a stable coin. Like, let's be honest. Right now in this market, who wants a stable coin? The reason that I'm trying to leverage or short-term trade to accumulate USDT is to spend it on altcoins and Bitcoin. So yeah, I'm trying to gain from every short-term trade as much USDT as I can using leverage. And then I funnel that into buying things spot. So yeah, I'm certainly not saying you should be trying to accumulate a stable coin in a bull market. Like, I definitely don't want anyone to get that confused. But anyway, point being that this is not looking great. Keep an eye on the 4 hour for ETH BTC. We don't want to create a lower low here. That's the thing. Is this potentially the beginning of a W? It doesn't look like it yet. We have continuous rejections of the 20 EMA, which is pretty significantly bearish. We don't have a stopping volume candle here, but we do have, a bit of a doji. So I would keep an eye on it, see if it happens to turn out to be a W. It's not looking like it will be, but what we're looking at right now is a low and a higher low currently. If this continues to break down, then we don't have the higher low. We have continuation of a downtrend. So yeah, I'm not hopeful that this is going to turn around, but I'm watching it in case I am wrong and in case the market surprises me pretty much. And if it does, then I definitely want my long position on Ethereum. Now, I know that many traders right now are having massive issues with exchanges, trying to get somewhere that they can trade on. It seems like one by one, we're just getting knocked out of regions and our favorite exchanges are getting taken away from us. And I get it. And it's difficult to stay on top of. You put your funds into an exchange and all of a sudden you get an email that they no longer support your region. And it's just, I just want to spend my money on crypto. Let me just spend my money on crypto. So if you are having this problem, I highly recommend that you check out Bitfinex. There is a link down below, and that link will get you the highest trading fee discount on the internet. You get a 25% rebate on all of your trading fees. That is the highest kickback that I could personally pass on to you guys. And I do that to assist you in your trading journey so that, the fees basically don't take you out, especially when you're short-term trading and using leverage. Fees can add up massively. So take that opportunity. KYC is not mandatory on Bitfinex at this point in time. So you should be able to use it no matter where you are. And they have really developed a lot of new features recently that makes it a lot easier to trade on. You can also get sign-up bonuses in addition to that trading fee rebate using the link down below. And they also have hundreds and hundreds of cryptocurrencies for you to trade with. So you should be able to find what you want on here. Also, very, very soon on this channel, I will have some full tutorials on how to use this exchange. So be sure to keep an eye out for that. And if you have not already, hit subscribe so that when those videos come out, you get notified about them.